And great for us, he's here at Post 9. Welcome back.
Thanks for having me.
What is your current view of these markets? We keep getting through these turbulent little episodes, and here we are. What do you think?
So by the way, went viral when I was on your show. We talked about it, I think it was 2 times ago.
Listen,
this is a pretty good investment environment. I mean, it's
you said it was like one of the best you've ever seen. That's what you're referring to that went viral.
And listen, I think there's a couple things at play. One, you've got an economy that's operating at a pretty good level. I mean, just printed, or we think you printed second quarter GDP at 3.8. Third quarter, we think is running 3.3. You got an economy that's operating at a pretty good level. And you've got a Fed that's got to bring rates down. And you've got a dynamic where corporate earnings are pretty good. I think one thing that I think is extraordinary, by the way, do I love multiples these levels? I don't. But these earnings, I mean, the level of earnings, and you're watching productivity happen. Everybody wants to talk about AI. But productivity that's happening, you see it in inventory management, logistics, automation, customer procurement. I'm pretty blown away. When I go through these earnings numbers, I say, gosh, these are pretty impressive. And you have the level of cash that's sitting out there that, my guess is it continues to drive these markets higher.
You and Tony Pasquarello at Goldman seem to have this simpatico of your belief on where we are and this ability to look beyond the noise, tune some of it out, and focus on the big picture. Today's note, he says, quote, if you want to be a serious bear right now, I suspect your timing needs to be impeccable, or the fundamental setup needs to change. Otherwise, you're fighting the Fed and fiscal stimulus and U.S. mega cap tech. I mean, it sounds like you could have written that.
And well, I agree. He's a pretty smart guy. I agree, but you also have a couple other things at play. The amount of cash on hand that's just got to naturally, and just normal earnings, savings that has to come in, and the buybacks. I mean, we're witnessing something that is history in terms of these companies throwing off earnings. And by the way, we talk about, is an AI bubble or is this a bubble? I mean, I'm actually going through a presentation where I'm presenting that the cash flow these companies throw off, the free cash flow they throw off, that allows them to do CapEx, allows them to invest in R&D, but then buy back their stock. So you actually are reducing your book equity outstanding and driving your stock higher. It's pretty unbelievable.
There was a report that I read today that because of the intense level of CapEx, that so much money is going towards CapEx that it's going to eat into the ability to buy back stock. Right, you have to make a decision, and if you're a mega cap, and that's maybe what we're referring to, that called into question the continued buybacks if you're going to keep amping it up on the CapEx.
So I don't know. I mean, at the end of the day, the answer is the amount of CapEx that's going is intense. I mean, the sheer size is going in. You still have enough free cash flow. By the way, we're talking about free cash flow. Companies who buy back their stock, they're not throwing off positive free cash flow. They're still throwing off enough free cash flow to buy back your stock. So it's pretty unbelievable. By the way, not everywhere. I mean, I think part of why I think tech is exciting. I say, you've got parts of the stock market. We talk about small caps all the time. I think it's very interesting. But in technology,
and you haven't,
and I haven't. I don't think they're very interesting. Yeah, but big tech, and by the way, you take big tech and expand it to who else is around data, including retailers, including obviously semis and everything that's around technology. The ability to use data is pretty, and I would say leisure and entertainment, same dynamic.
Is there pockets of froth that makes you a little uneasy? Apollo's Torsten Slok had an interesting chart out today. Companies with negative earnings are outperforming companies with positive earnings. That's pretty interesting. That's this month. I mean, what do you think about that?
So there's truth to that. I mean, in fact, this month I was looking at the most shorted stocks. They've killed it. And so there's clearly a dynamic where people have gotten short names. That's running higher. Listen, I think we've talked about it. We talked about it in California. The idea around complacency is high. And you look at your portfolio today. By the way, you look at Apple, you look at other names. They become larger and larger portions of your portfolio. You have to be thoughtful about that. And how do you manage the downside? The nice thing is the volatility in the markets is pretty low, that you can buy some downside protection. There's some interesting things you can do to buy some downside, so you can stay long, but then have some downside protection.